You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is James Corbett, publisher of theCorbettReport.com and editorial writer for the International Forecaster. Welcome to the show, James.
Thanks so much for having me back. Always a pleasure to be here.
You're speaking to us from Japan, where they've just instituted negative interest rates. How's that being received?
With a lot of head scratching. I mean, I guess we understand why they are trying to throw the kitchen sink at this never-ending problem of Japan's deflationary cycle, but it's kind of surprising insofar as it was literally 1 week before the surprise move was made that Haruhiko Kuroda, the governor of the Bank of Japan, was telling Japanese parliament, we are not considering a cut on interest rates in Japan. And here we go. We're into negative territory. So they were attempting, obviously, to surprise the markets and to shock it into life. And I think that the markets are already bearing out the idea that this is not fundamentally going to change the game. Things have returned to pretty much the levels they were at before this move was announced. So whatever short-term game they were trying to make out of this doesn't seem to be breathing any life into the moribund economy here. And I think long-term, I mean, this does not portend well for the Japanese economy generally. But hey, we'll see. We'll see if this brand new venture into uncharted territory is going to have any effect on actual productive activity in the economy. I, for one, and I think a lot of people here, are not holding their breath.
I thought Japan had one of the highest savings rates in the world.
I believe they do. And a lot of that long-term saving is held in Japanese government bonds. Of course, with the demographic crunch that's coming here as the society ages, you get a lot of retirees trying to cash in those bonds and a lot fewer workers underneath them trying to buy in. So that's creating a type of squeeze itself. So part of Abenomics was about getting some of that money out of the JGB buying game and into the markets to hopefully spur some economic productivity. And part of that was getting the pension fund, the Japanese government pension fund, whatever it's called, GPIF, one of the largest pension funds in the world, if not the largest, to start basically propping up the stock market here. And that's been more or less a failure. There's been a bit of market lift, but it hasn't really translated into anything for the average Japanese worker, and it certainly isn't helping with Japan's ever-growing debt-to-GDP ratio.
How do negative interest rates work, and how are they supposed to help?
The idea here is that this is not necessarily going to filter down to the consumer level, although banks could pass it on theoretically. But the idea here is that this is going to apply to reserves that are parked with the central bank by commercial banks. So basically, commercial banks are going to be charged for parking money at the central bank. And the idea here is that this will encourage them, instead of parking money in reserve, it will encourage them to lend it out into the economy. So it's basically giving them a little bit of fire under their behind to try to go out there and find customers or make customers to loan some of this money out to, so to get it flowing through the economy and hopefully actually spurring some actual productive activity rather than just sitting in a central bank reserve. Whether or not it's going to translate into that is highly doubtful at this point, but one effect that we are very likely to see with all of this is that the smaller regional banks are going to be the most hardest hit as a result of this. The larger banks can probably afford to sit there and swallow the negative interest if they want to, but smaller regional banks are not going to have that luxury, and they're probably not going to be able to pass the hurt on to their customers, because if the large banks don't do so, then the regional banks won't be able to justify doing so. So it's probably just going to pinch a few of the smaller banks out of the market, rather than the very large, well-capitalized but zombie banks that have been, propped up for decades here and are a key part of the underlying problem. They're probably not going to be affected too adversely by this.
Well, the way I look at it, negative interest rates. So the banks charge me if I put money in. Does that mean if I take out a mortgage, they'll give me money?
Oh, one could only wish. No, unfortunately, it's not going to work like that. But I think this is an interesting phenomenon. It's been tried out now in Europe. I believe Swedish, Swiss, and Danish governments have moved into negative territory, and has not had a large stimulus effect on their economies. So I'm not exactly expecting much to come out of this. But there are some real ramifications that might come out of a move like this. One being that this is another domino towards toppling other dominoes, other central banks out there that are looking to, well, they've already got negative or zero interest rates, and where else are you going to go other than negative? And probably the next on the chopping block will be something like Canada, which is already looking into this. So this might start another round of basically the currency wars that we've been seeing for years now. Whether or not people admit that such a thing is going on, there has been and is continuing to be a race to the bottom as countries try to make their exports more valuable. And in the East Asian region, where there's a lot of competition these days for export markets, I think Japan has just really launched a new, well, they're calling it the torpedo, Kuroda's torpedo on the markets, and this could be a serious escalation of that currency war.
Well, if the race to the bottom is supposed to be helpful, you won't find too many Canadians cheering it on, with the loonie falling down to around 70, 71 cents. And the cost of importing food in the wintertime has just skyrocketed. And we haven't seen a huge increase in exports yet from it because the government was so focused on extracting resources, they didn't think about building things back when the dollar was worth $1.10 and oil was $120 a barrel.
And because Canada is heavily commodity dependent nation, commodity exports, and we're in a commodity deflationary cycle, that is not obviously helping things out. And of course, I mean, the oil markets is where most people have their attention these days, but you can look at other commodities as well. Copper and everything else is down. So I think Canada is in a particularly precarious situation, and there really is no bright spot on the horizon at this point for the Canadian economy.
Yes, and a lot of business leaders I've talked to are not big fans of the head of the Bank of Canada, Stephen Poloz. They have a lot of words for them, but they aren't happy motoring.
I can imagine that's the case, and one wonders how long he's going to be in that position, or maybe he'll get recruited up to the big leagues of the Bank of England like his predecessor there, Mark Carney. Maybe not, but at any rate, yes, I can imagine that a lot of business people are not happy with the environment. But again, what can the central bank ultimately do at this point? The only levers of control they have are interest rates and or extraordinary buying, like the quantitative easing we've been seeing going on in various countries over the years, and neither lever seems to be particularly effective at actually generating economic activity, which may or may not be actually controllable by central banks. But never ever call into question the ability of the central banking gods to control the markets, because then, you're stepping outside of the pale of acceptable economic discussion. Maybe we are heading into a world where we can once again start questioning whether central banks really are the best way of trying to control an economy.
We've had something like, 21, 28 recessions since central banks were invented? It
is absolutely cyclical, and, the Austrians out there will tell you it's absolutely a result of the central bank policies and the malinvestment that comes about as a result of putting rates too far up or too far down rather than letting the market decide the rates. When you have a central authority telling the market what the rates are, it's going to create misinvestment, misallocation of funds in wrong investments, and it's going to create bubbles, and those bubbles are going to burst. And we are on the burst side of the cycle at this point as the 8-year QE run is coming to its end. So it's not a good time to be investing in those markets at the moment, because there's only one way to go once you've gone that far up, and that's down.
Any attention to the real estate markets in Canada from Japan, with Vancouver and Toronto having tremendous increases in real estate value over the last year?
Yes, well, I don't think there's a lot of room for a lot of people to be playing around in the Canadian real estate markets here in Japan. But certainly there has been a very large inflation of real estate prices in certain areas of Canada, and I think that does have to do with interest and investment from East Asia, but probably more the Chinese investment than the Japanese.
A giant Ponzi scheme, so said, discovered in China. 21 arrests, over $7 billion in bilked funds. Are these just scapegoats for the problems on the market, or is this a real commercial crime?
I haven't looked into it enough to be able to say definitively. Where there's smoke, there may be fire, but one can never really tell definitively with the Chinese system, because they certainly do use scapegoats to try to pin general market problems on. And this is, if history is any guide, this would be more along those lines. So who knows, maybe there was some actual shenanigans going on, but to try to blame whatever is happening in the Chinese markets right now on a few bad apples is not the right way of looking at it. It's not the right paradigm, because I think we have to understand China is contracting right now, and try as they might to try to prop up whatever is going on in their markets. I think that they're really just instead of trying to keep the beach ball underwater, I don't know what the exact opposite of that analogy is, but they're trying to keep it propped up, and I don't think it's going to work for very long, which is why we are very likely to see further and perhaps significant devaluation of the yuan this year.
I just heard, too, that in China, they consider anyone who takes a lot of money out of the stock market right now unpatriotic.
They are sending every signal that they possibly can to the markets that if you try to short too much, too hard, however that's defined, that they're going to come and get you. And I think they made a few examples in the route from last summer. And I think everyone in China understands that when the Chinese authorities come knocking on your door to talk about the investments you've been making, you probably don't have a leg to stand on. And you'll probably be paraded out in front of the media to make your forced confession. So again, I think everyone understands that the markets in China are very largely dictated by the central bank and the governing authorities. So I don't think anyone has any wool over their eyes. But on the other side of that, the Chinese government has made it very clear that they're going to backstop and underwrite what's going on in the stock market, at least at the moment. So I think that's why you have a lot of activity there. But yes, they've been sending every signal possible that they're going to try to shame, if not prosecute, people who are found to be shorting a little too much or a little too hard.
I heard there was something like 300 to 400 business executives who, quote, weren't arrested, but have kind of disappeared and nobody knows where they are.
Again, all we can do is estimate that type of thing, because I don't know of any hard numbers on that, but it certainly wouldn't surprise me if reality was somewhere in that league. And we do know about the secret meetings that they were having with major investors and investment firms in China, backdoor during that summer crisis. And we do know that they ultimately came out with one lowly reporter for a rather out-of-the-way magazine that they tried to blame all of the selling on. So again, it's just the way business works in a heavily controlled communist, still fundamentally communist, but somewhat capitalist society.
I think it's called fascist.
Good point.
When you have a dictator, but so-called free enterprise. What about this war on cash? We keep hearing more and more talk about how governments want to remove cash and every transaction has to be electronic so they can track every penny.
I think we have to see a connection between the negative interest rate environment and the sudden uptick in propaganda for the war on cash. Certainly we've seen this for years now, and to a certain extent you can understand that there is just a sort of technological progression that's going on here. Electronic payment is now easier and faster, and everyone, can carry a card in their wallet probably more easily than they can carry all these little bills and coins. So there is some sort of technological motivation here, but I think we have to see the significant uptick in bankers and central bankers coming out in the last several months, really hard, doing hard campaigning, and in some cases literal marketing campaigns for the new electronic payment society that they want to steer us into. For example, in Ireland, they launched a national payments scheme where they spent €1 million, which is a significant chunk of change in the Irish market, for a marketing campaign, specifically to encourage people to pay via electronics. And I think we have to understand it's because we are moving into that negative interest rate environment world that bankers have a very, very obvious vested interest in seeing as much out of the monetary system as possible being steered away from cash. Because in a negative rate environment, if you do pass that on to consumers and people are literally paying the banks for the privilege of parking their money in their bank account, people will try to take it out. They'll try to stuff it under their mattress and retain the value. So how do you prevent people from doing that? Well, if there is no cash, that would be a very convenient way of making sure that whatever interest rates they try to apply, people will just have to sit there and swallow it. So I think there is a relation going on there. I think there's a lot of other forces at work, but that's at least one of the things that we have to look at, especially as to why there's such a push right now going on with regards to this. And people who aren't aware of that, right now at CorbettReport.com, I have an article up, The War on Cash, a country-by-country guide, where myself and the Corbett Report community members are assembling all of these different stories from all of these different places around the world, Australia and Argentina and Kenya and Israel and Iran and India and all of these different places where this agenda is being pushed right now. And it's interesting to see. You might see one or two of these stories float across the newswire, but when you see them all lined up from literally dozens of countries all around the world, all within the last year or two, all pushing this same cashless agenda, you start to realize there's something much bigger at work here.
How does this play with the electronic currencies like Bitcoin?
Well, I think we have to differentiate between the idea of electronic payments that are going through payment services that are either, for example, the old credit card route or linked to banks in some way, versus a decentralized system like what Bitcoin is. I think there is a fundamental difference there. In terms of the psychology of people being sort of weaned off of cash and onto a system where all payments are electronic, I guess it amounts to the same thing. But fundamentally, Bitcoin and other cryptocurrencies based on the blockchain technology are a fundamentally different thing. Although Bitcoin, as we have seen, is becoming more and more, there's a lot more forces that are trying to make it into something that will play nice with the banking system. And so we're seeing a lot of regulatory interest coming in and groups that are trying to organize around making some of these exchanges play nice with the banking system. So I think there's a move right now to see how Bitcoin will play nice and cooperate or not play nice and not be within that banking system. I think that's going to be a very interesting thing to see playing out over the next few years. But fundamentally, it is a different thing than electronic payments that are still being made in dollars through the traditional banking system.
How is gold going to do with all this pressure on cash?
You know, that's an interesting question, especially because we've just seen some pretty interesting uptick in gold. It's now trading, as we speak, it's over 1140. So we have seen an interesting uptick in gold recently, and I don't know. I mean, I don't know to what extent this is about the war on cash, but one can certainly imagine that as the pinch starts to come on cash, and as we move into negative interest rate environments, more people are at least going to be thinking about, maybe I should get some of this, electronic ones and zeros out of my bank account and into something that's actually physical that I can hold in my hand. Gold and silver would probably be the most obvious choices for that, considering they've been around as investments and hedges for literally thousands of years and retain their value throughout much of that time. So I think there's going to be some upward pressure. I mean, there has, obviously, we've seen a sort of contraction of precious metals, especially gold, in the last few years. And there may be more to go in that bear run. We may see prices pushed under 1,000, but I don't think we'll see them there for very long. And I think long term, I think this is going to have an upward effect on prices from where they are today.
And I've also heard that gold miners, when other commodity companies are being shunned right now as investments, people are taking a look at the gold miners, especially the ones who have remained profitable with low gold prices.
Absolutely. One can certainly expect that as long as if you are expecting that gold prices are going to be going up, then obviously any gold miners that have remained profitable during this depressed period are going to be presumably much more profitable once we get prices back up. So gold mining, again, a lot of potential in markets there.
Is there much demand in Japan for LNG? And do the Canadian companies that expect to do a lot of business in Asia, do they have a reasonable expectation of perhaps doing a lot of business?
Well, they should, yes. I mean, Japan is hugely reliant on LNG at the moment because at this point, a couple of the nuclear reactors have been turned back on, but still, there is absolutely a lot of demand for LNG in the nation right now to basically maintain the power that the nuclear 52 nuclear plants throughout Japan were doing before the Fukushima disaster. So there has been a large amount of importing that's been going on, but the demand, the supply might be coming up and to meet the demand. Just a couple of months ago, they were reporting that Japan is looking like that the buyers may exceed combined demand from 2017 to 2021. So it looks like they're locking in supply for the coming years. So there may not be as much of an opportunity now as there was a few years ago, but certainly there still is a lot of demand here in this country. And I don't see that changing anytime in the near future, especially because it is such a slow process for these nuclear reactors to come back online.
James, anything else buzzing around in your bonnet right now?
Oh, there's always a lot buzzing around, but I think that pretty much covers a lot of the main economic stories I'm looking at. But I will be, for those who are interested, I will be looking at the Zika virus phenomenon and what we do or don't know about it and what the WHO's declaration of public health emergency means or doesn't mean for various players, including economically, in my subscriber newsletter this weekend.
Well, we're told the particular mosquito that carries Zika does not live in Canada, but we've been told other pests won't make their way here, and now we have the Asia gypsy moth to worry about. So why would the Zika mosquito be any different?
Yes, and they have been spreading around the world along shipping routes. So they have made their way to the U.S. and other places. So is it only a matter of time until they make it to Canada, or are they physically incapable of surviving in Canada? I think we'll have to find out about that. But yes, that's one of the things that people should at least be looking at. And we should also be questioning some of the larger narratives about how many of these microcephaly cases have actually been confirmed. And the answer is only 200 or something, not the 4,000 figure that they're throwing around. And how many of them have been actually linked to the Zika virus? And the answer is 0, because there has been no confirmation that this is actually related to the Zika virus. So there may be a lot of hype going on right now, and I think it's important for people to stop before they hit that panic button.
James, thanks a lot for chatting with us.
Thank you very much for having me on. Always a pleasure.
My guest has been James Corbett, publisher of thecorbettreport.com and editorial writer for the International Forecaster. He's been speaking to us from Japan. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.